I'll be back.
Hello everybody and welcome back to the channel, and today's video that is going to focus on the top 4 gaming ETFs in the market as of today. This is probably one of the most exciting industries as we speak. According to us, it is experiencing significant growth. A lot of money is flowing into the industry. You have a lot of people who previously were not interested in normal sports who takes a very great interest in, for example, eSports that is exploding. You have people who also traditionally like to view normal sports who are transitioning into viewing eSports as an alternative. You have Twitch streamers where people are sitting watching them. It's just, there's quite a lot of buzz around the whole gaming industry, and it's something that we expect will continue in the future. And before going into each different ETFs, we just want to say overall that we think that more or less everyone in the world should consider very deeply to have a gaming ETF in their portfolio.
Hadouken!
So if we first take a look at the return over the last year, what becomes quite clear is that all of them have delivered outstanding results over the last year. The one that has returned the least with 92.29% is the one that is called ESPO. It's the VanEck Vectors Video Gaming and eSports ETF. The next one with 96.85%, we have the one that is called Gamer, Wedbush ETFMG Video Game Tech ETF. What is quite interesting for this one specifically is that it had an explosive growth towards the beginning of the year, and now it has fallen down a little bit again, and we're going to explain why this is the case later in the video. We then have Hero, the Global X Video Games and eSports ETF that has returned 108.96%. And finally, the one that has returned the best with more than 135.03%, we have Nerd, the Roundhill BITKRAFT eSports and Digital Entertainment ETF. So again, that one has done the best, but looking at all 4 of them, they have delivered tremendous returns to the shareholders. And as we just mentioned, we expect that this will continue in the future. So it's quite clear what the purpose of these ETFs are. It is to focus on the video games and esports industry, and more or less all of them are investing at least 80% of the total assets within this specific industries. If we take a look at the median bid-ask spread for the last 30 days, it just shows the difference between the highest price buyers willing to pay and the lowest price that a seller is willing to accept. So the lower this number is, the more liquid is the ETF. And as we can see here, 0.10 for ESPO, 0.15 for Hero, and 0.16 for Nerd. They are relatively liquid ETFs. It's a little bit higher for Gamer on 0.43%, but overall, this is still a relatively liquid ETF. If we take a look at the beta ratio, it just shows the volatility in relation to the overall market. If it's above 1, it's more volatile than the general market, and it becomes quite clear here that overall, all of them are less volatile than the overall market. Finally, we have the tracking error, which is the divergence between the price behavior of the ETF and the price behavior of the underlying index. So it shows how big of a difference the return is on the ETF versus what it's supposed to be from the underlying index. And as we can see here, ESPO, Hero, and Nerd has around 14 to 18%, which is quite common for this type of ETF that is focusing on a sector specific. Gamer has 35%, so significantly higher. This is not necessarily a bad thing, because you can have a tracking error that actually means that it provides a higher return than what it's supposed to be. However, usually when you want to invest in an ETF, you obviously have an idea that you want to follow the general index, underlying index that the ETF is supposed to follow.
Okay, I'm back.
So when we are analyzing ETFs, we always want to check 2 things. One of them is the diversification from a country perspective, to just see how our exposure is to different countries in the world. As we can see here across the board with all ETFs, they are quite diversified from a country perspective. They have at least 9 different countries in their portfolio. So again, you get a broad exposure investing in these ETFs, which we in general like. Secondly, we have the company holdings, which is probably even more important for us, especially for this type of ETFs. If we take a look at eSport, we can see a lot of well-known names. You have Tencent Holdings, you have Nvidia Corporation, you have Bilibili, you have Sea Limited, which is one of the more hype stocks as we speak today. You have AMD, you have Nintendo, everybody knows that. You have Activision, Blizzard, very known, and obviously Electronic Arts, which has a lot of the sports games. So again, for this ETF, there's quite a lot of well-known names. Hero, in many ways, very similar to the eSport one. A lot of the same companies, a little bit different percentage holdings. So again, depending on which kind of company that you prefer, you may prefer Hero over eSport, depending on which of them that you like the most. Another known company in their portfolio, at least in the top 10, is Capcom, which we also assume that most of you are aware about. Then we have Nerd, and for Nerd specifically, there's a few more companies that are unfamiliar to us, especially the top holding, Huya Inc. We haven't heard about them before, so we don't know exactly what they're doing. The same with DoYu International Holdings. So again, it doesn't mean that it's bad. It just means that for us, we are not as familiar with a lot of the companies in the top 10 part. Finally, we have Gamer, and this one is quite interesting because the biggest holding for them with 25.26% is GameStop. Obviously one of the most talked about stocks over the past few months because the retail investors have been fighting with Wall Street. So again, that is obviously quite interesting, but we are a little bit reluctant with this ETF, or we don't like it as much simply because you have such a big exposure in GameStop. It obviously means that you can get quick high returns on this ETF, but in the end of the day, we don't believe in GameStop business model. We believe that it's going to die at some point in the future. So therefore, we are not as keen on this ETF. It will definitely be more volatile than some of the others, at least today. And that was also the reason for what we saw earlier, where it had a big spike in the beginning of the year for thereafter to fall back significantly. That's obviously related to the whole GameStop situation.
Pong, 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 pong.
So here in the overall overview, the industry focus is obviously the gaming for all these ETFs. From a risk beta track error perspective, we think that for the first three they are low, while as for Gamer we see that more as medium. We know that the beta was less than 1, however the tracking error is quite high, and obviously that is due to the whole GameStop situation, which is the biggest holding. From a liquidity perspective, the first three, eSport, Hero, and Nerd, we think that that is relatively high. It was only 0 to 10 to 0.16% for each three of them, while as Gamer was a little bit higher with 0.43. So again, it's not because it's very illiquid, but it's just less than the others. That's just what we wanted to illustrate. From a country diversification, it's high for all of them, minimum 9 countries in each one of them, which is really good. On the stock diversification, we think all of them are medium. And you could say, yeah, but for Gamer, you know, GameStop was 25.26%, and that's obviously correct. You have a really high exposure to that single stock. However, for the next one in the line, it's actually a lot smaller than that of eSport, Hero, and Nerd. So you still in the Gamer one get a quite decent stock diversification. Very important information as well when investing in ETFs. It's obvious to get an understanding on the dividend yield and the total expense ratio. So basically your yearly cost for having the ETF. And if we take a look at the dividend yield, we can see that eSport is paying the least with 0.12% and Nerd is paying the highest with 1%. However, it is not extremely high dividend yield. So if you're dividend oriented investors, this may not be the ETF for you. However, we could also see that in the future the dividend yield may increases for some of these companies. On a total expense ratio, overall they are not cheap, but they are neither significantly expensive. eSport, Hero, and Nerd is around 0.50%. Gamer is the highest with 0.75%. If we take a look at the simple moving averages, which is just the benchmark of the current price versus the average of the selected range of prices, 20, 50, and 200 days. This is basically a technical indicator. We can see that all of them as of today is in an uptrend from all the three simple moving averages. So again, no surprise given what we saw earlier in the video, where they over the last 1 year has all increased more or less with 100% or more each one of them.
No, don't put that
If we then take a look at the performance for a longer period, here we have a graph that shows the return over the last 5 years. And what becomes evident here is that the Gamer one is the oldest one of these ETFs. As we can see here, this started before 2016. And over the last 5 years, Gamer has returned 262.46%. The next oldest one is the eSport one, which started a few years ago. And basically that has returned over the last 2.5 years, 174.68%. So again, extremely good return. Then we have the Nerd one, is the third oldest one. It is only around 1.5 years old. And that has returned 151.95%. So again, extremely good return. And similar with Hero, which is less than 1.5 years old, it has returned 140.17%. So again, most of these ETFs has not been around for too long, but all of them have overall delivered quite well. It's interesting to see for the Gamer one, we can see here in 2018 to 2019, the ETF actually didn't perform too well, but since the Rona situation started, the ETFs basically exploded, which obviously natural because more people were staying at home. They couldn't spend money on other types of things like vacation. So what do? Well, you probably play more video games and you pay more money to various games. So no surprises there. And obviously the other ones have done relatively stable well. Obviously all of them had a dip when the Rona situation started, but otherwise they have obviously recovered and more to that since then. So again, it's just to illustrate that the Gamer one has not just been going one way up, it also has a little bit downturns a few times, but overall over the last 5 years, it has obviously delivered tremendous return to its investors. Back to the overall overview, we looked at the dividend yield. Nerd is paying the highest, eSport is paying the lowest, but none of them is providing a huge dividend yield. So keep that in mind if you're a dividend-oriented investor. On the total expense ratio, Hero and Nerd was the cheapest with 0.50%, eSport was close to that, and Gamer was the most expensive one with 0.75%. On the performance over the last year, as we saw initially, Nerd has been doing the best, followed by Hero, Gamer and eSport. But if we take a look over the last 5 years, which is probably not a fair comparison given that most of these ETFs are only around 2.5 years or less old, nonetheless, Gamer has returned the best over this period, followed by eSport, Nerd and Hero. Finally, we have the trend of all these ETFs, and all of them are in an uptrend from each single angle on the simple moving average perspective.
Hasta la vista, tree.
So what is the verdict on all these 4 ETFs? Well, first of all, at least 3 of them has our interest as of today. If we take a look at the eSport, we believe that it will have long-term good value, it have great diversification, and it has many solid companies that are well known to us. More or less similar situation with Hero, long-term good value, great diversification and many solid companies. Then we have the Nerd one. It has low cost, it has the best dividend yield, and it has overall delivered very solid performance. However, the only if with this one is that there's a lot more unknown companies to us in their top 10 portfolio holdings, and we would have to understand them a bit better before we would take any action with this ETF. But overall, you cannot neglect the numbers. So far, it has been doing extremely well. Finally, we have Gamer, and as of today, this is the least favorite of all the 4 ETFs. The simple reason for this is that we do not feel we need any high exposure to GameStop, simply because we don't believe in the business model of GameStop. Irrespective of what Wall Street bets are doing, we do not need to engage in that. We'd rather stay on the sideline, especially when we're investing in an ETF like that. So until Gamer is readjusting their portfolio and have less exposure to a company like Gamer, we will definitely stay clear of that one. This was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please give us a like. It really helps with the algorithm. Please provide a comment in the comment section. What do you think about these 4 gaming ETFs? Do you think that they will provide good value in the future? Besides that, there's not much more to say than have a nice day, stay safe, hasta la vista, baby.